And if you're experiencing the same problems in your suburb and feel that nothing's being done, you can contact us on the Today Tonight website. There are rumours the big Japanese banks are looking to muscle in on Australia's mortgage market, and some predict that could spark a discount bidding war for home loans. So could rates drop to as low as 4.5%? Well, as James Thomas reports, we may even see electrical giant Sony offering cut-price loans.
In Japan, you can get a variable mortgage rate of 2% on your home loan. Could it happen here?
Sony Bank is very serious about Australia.
They have swamped us with TVs and electronics. Now the Japanese super company is deep in planning a raid on our mortgage market.
They opened a representative office here last year, and they're serious about opening up a full Sony Bank operation in Australia.
And it's not just Sony Bank. As we discovered, there is a raft of Japanese banks ready to do battle in Australia.
This is the office of Sumitomo Mitsui Finances. And in this impressive building, one of Japan's biggest banks, Mitsubishi UFJ. And inside this building, the office of Mizuho Financial Group.
They all declined to comment for our story, but Financial Review journalist Tony Boyd says he is patched in to impeccable sources who say the Japanese raid is definitely underway.
I think it's really big in the sense that it could introduce the first serious competition in banking for about 20 years.
Tony says Japanese banks have a competitive advantage which could see them smash our local rates.
I mean, the average deposit rate in Japan at the moment is 0.1%.
That's about 600% less than Australian banks pay for their deposits. They get money more cheaply, so they can afford to give it to us cheaply, which our banks will hate, but homeowners will love.
Any new competition is good news for borrowers.
Finance experts have predicted that Sony and the Japanese banks could start in Australia with a mortgage rate as low as 4.5%. Head of strategy for CanStar, Steve Mickenbecker, crunched the numbers on what it would mean for homeowners.
On a $300,000 loan, it's $380. On a $500,000 loan, $640. And when your loan hits $1 million, $1,280 per month. They're all monthly savings and they're very significant.
John Simond is a significant player in the world of Australian banking. He took the fight to the Big Four 20 years ago, but today he's playing killjoy.
Well, I would love this turn out to be real, but I've got to tell you, I've got my serious doubts.
Aussie John says the Japanese rumours are just that.
Why do you believe that this can't be done?
Because as soon as you play with a foreign currency and bring it to another country, you've got this huge insurance risk of currency movements. Otherwise, everyone would be doing it. Our banks would go to Japan and borrow from the Japanese banks there.
Something's happening. I mean, this is not just made up.
Tony Boyd believes John Simond is no longer an independent voice, and his opinions are essentially those of someone feeling the heat.
Oh, he's got to be nervous. Well, let's face it, John Simond is 30% owned by the Commonwealth Bank. He's part of the oligopoly that is not providing a complete and full and effective competition.
I hope it happens, but unfortunately, I don't believe in the tooth fairy.
If John Simond turned up in Japan to raise money, he would be laughed out of Tokyo.
Tony believes that foreign interests in Japan have a tough time, but Japanese companies in Australia, well, he believes it's open slather.
They have expanded into all sorts of aspects of the Australian economy, and why wouldn't banking be next?
If it did happen, it would be amazing for consumers because they would save on a typical home loan $3,000, $4,000, $5,000 a year, and that's after-tax dollars. So it would be great, but I am sceptical.